Canada's trade landscape faces unprecedented uncertainty. Venezuela's economy has reportedly lost billions in annual export revenue, according to international economic analysis. Iran confronts what economists describe as one of the most comprehensive sanctions regimes in recent history. Trade experts estimate their export volumes declined significantly, and Canadian businesses operating globally face complex navigation challenges, not because Canada maintains massive trade volumes with these specific nations. The bilateral trade remains relatively modest, but international trade analysts note that when major economies experience severe disruptions simultaneously, the effects ripple across global supply chains. Trade routes face complications. Alternative pathways experience congestion, and nations with diversified trade portfolios face complex compliance decisions. Canadian exporters and policymakers are currently evaluating these dynamics, and the situation continues developing. Venezuela's economic challenges. Let's examine Venezuela's current economic situation. Venezuela historically produced significant oil volumes before recent geopolitical developments. Industry reports indicate production reached nearly 2 million barrels daily during peak periods. This production generated substantial export revenue that supported government operations and economic activity. Current reports suggest production faces major disruptions. International observers note facility challenges. Export terminal operations reportedly experience complications. Supply chain experts document coordination difficulties. Economic analysts estimate the revenue impact reaches billions annually. But beyond headline numbers lies broader commercial complexity. Venezuela maintained trade relationships with numerous nations. Canadian companies participated in various sectors according to trade data: mining equipment exports, agricultural machinery, technology services across multiple industries. Trade statistics suggest bilateral commerce between Canada and Venezuela reached several $100 million annually during stable periods. While not representing Canada's largest trading relationship, the volume supported specific industrial sectors and employment. That commercial activity now faces significant uncertainty according to business reports. Canadian firms with Venezuelan contractual relationships report complications, payment system challenges, currency volatility concerns, contract enforcement uncertainties affecting multiple sectors. Industry groups note manufacturers in Ontario, Alberta, and Quebec serving Venezuelan markets face revenue questions. Mining equipment producers, oil services technology providers, agricultural machinery exporters, all navigating rapidly changing circumstances. Iran's sanctions environment. Iran's situation adds additional complexity to this analysis. Iran faces comprehensive sanctions targeting multiple economic sectors according to official policy documents: oil exports, banking systems, insurance markets, shipping logistics, technology sectors. Various restrictions apply across these areas. Trade analysts estimate Iranian commerce volumes declined substantially from historical levels. International trade databases suggest reductions from approximately $200 billion to significantly lower figures, major decreases affecting economic activity. But sanctions create complications extending beyond direct bilateral trade. Canadian companies face what trade lawyers call secondary sanctions considerations. Direct trade with sanctioned entities raises compliance questions. Commercial relationships with firms conducting sanctioned business create regulatory gray areas. Financial services processing certain transactions face potential violations. The compliance framework extends considerably beyond simple bilateral restrictions. Canadian pharmaceutical companies historically maintain medical supply exports to Iran, according to industry records. Humanitarian exemptions theoretically permit such trade. Practically, however, trade associations report challenges. Banking institutions express transaction processing concerns. Insurance providers demonstrate port coverage hesitation. Shipping companies show routing avoidance patterns. The result: industry groups report even theoretically permitted trade faces practical obstacles. Canadian energy sector analysts note Iran's substantial natural gas reserves. Potential markets for Canadian technology exist theoretically. Potential competition for European markets also factors into analysis. Current sanctions environment complicates both scenarios significantly. Mining sector representatives document similar dynamics. Iran requires mining equipment according to development plans. Canadian companies manufacture relevant technology. Sanctions framework currently restricts such transactions. Historical trade data suggests Canadian-Iranian commerce reached approximately $200 million annually across diversified sectors: agriculture, industrial equipment, medical supplies, technology services, currently facing significant operational complications, according to business reports. Canada's trade exposure analysis. Combining both situations creates interesting analytical questions. Venezuela and Iran together represented roughly $700 million in annual Canadian trade during stable periods, according to available statistics. $700 million represents modest percentage of Canada's approximately $2 trillion economy. However, trade economists note examining ripple effects provides fuller picture. These nations aren't isolated commercial cases, according to international trade analysis. They represent broader patterns: oil-producing regions experiencing instability, sanctions regimes affecting multiple markets, trade routes facing reliability questions. Canada's export economy depends substantially on predictable commercial flows, according to economic studies. We export commodities, import manufactured goods, rely on functioning shipping routes, count on enforceable contracts. When major economies experience disruptions, economists note that predictability faces challenges. Venezuelan oil supply complications contribute to global price movements, according to energy market analysis. Canadian energy exports may benefit from certain price dynamics initially. However, manufacturing sectors face higher input costs. Transportation expenses increase. Industry analysts note profit margin pressures. Iranian sanctions complicate Middle East commercial engagement broadly. Canadian firms operating regionally face enhanced compliance requirements, according to trade law analysis. Transactions face scrutiny. Business relationships require investigation. Shipments experience delays. Administrative costs alone become substantial, according to business surveys. But trade policy analysts identify deeper structural concerns. These aren't isolated incidents in their assessment. They establish patterns affecting strategic planning. Various markets have experienced severe disruptions historically. Venezuela facing current challenges. Iran under sanctions pressure. Trade strategists question which markets face uncertainty next. Canadian exporters increasingly evaluate emerging market engagement risks, according to industry surveys. Complexity concerns, compliance expense considerations, risk management priorities, cascading effects. Observe how instability potentially compounds according to economic models. Venezuelan oil supply questions affect global markets. Refineries seek alternatives. Bidding for available supply intensifies. Prices respond to supply dynamics. Canadian manufacturers consuming petroleum products face input cost considerations. Chemical producers, plastics manufacturers, transportation companies, industry groups report simultaneous pressures. Profit margins requiring adjustment, according to financial analysis. Iranian sanctions influence Asian buyer behavior. Alternative suppliers face increased interest. Canadian energy firms receive inquiries. Initial positive signals. However, compliance framework considerations emerge. Treasury Department processes apply to certain transactions. Monitoring requirements exist. Banking channels face scrutiny. Trade lawyers note bureaucratic requirements create transaction complexity. Meanwhile, analysts observe Chinese companies operate under different regulatory frameworks. They maintain Iranian commercial relationships. They serve markets Canadian firms evaluate carefully. Market analysts track share dynamics shifting patterns. Venezuelan economic challenges create humanitarian considerations. Regional stability questions emerge. Neighboring countries experience various pressures. Canadian aid policy discussions expand. Resource allocation debates occur. Priority balancing continues. Each situation creates additional considerations. Each disruption generates new complexity. Cumulative effects require careful navigation. And Canadian businesses and policymakers continue monitoring these dynamics closely. Geopolitical considerations. Here's where policy analysis becomes particularly complex. American sanctions policy significantly influences these restrictions, according to international relations experts. Treasury Department establishes frameworks. State Department oversees compliance mechanisms. Canadian firms must navigate these requirements carefully. Secondary sanctions represent genuine considerations according to trade law analysis. Commerce with sanctioned entities raises market access questions. American banking system connections matter. American partnership relationships factor into decisions. For Canadian exporters, American market access represents crucial consideration. Trade statistics show approximately 75% of Canadian exports flow to United States. Access maintenance matters enormously for economic planning, so Canadian firms implement compliance programs. They evaluate Iranian market questions carefully. They assess Venezuelan operations thoughtfully. They follow regulatory requirements, but compliance carries costs according to business impact studies. Markets become unavailable. Relationships face complications. Industrial capacity utilization questions arise. Employment considerations emerge. Tax revenue effects require evaluation. And fundamental policy questions emerge in trade policy debates. Are we maintaining appropriate sovereignty balance or accepting problematic dependency? Current circumstances mean Washington regulatory decisions significantly affect Canadian trade patterns. Limited bilateral consultation. Canadian input opportunities vary. Compliance expectations remain clear. If this analysis examines angles you haven't seen elsewhere, consider supporting the channel. We cover trade policy complications and sovereignty questions. Mainstream coverage often overlooks. Supply chain complexity. Examine broader supply chain dynamics according to logistics analysis. Global manufacturing depends on predictable flows according to operations research. Components from multiple countries. Assembly in various locations. Distribution globally. Any disruption potentially cascades through interconnected systems. Venezuelan instability removes certain suppliers from reliable networks. Iranian sanctions block specific alternatives. Manufacturers seek additional options. Additional alternatives. Backup suppliers. Each alternative typically costs more according to procurement analysis. Takes longer to establish. Introduces quality assurance considerations. Canadian manufacturers integrated into global supply chains navigate these complications according to industry reports. Automotive parts requiring certain raw materials. Electronics needing specific rare earth elements. Medical devices dependent on various regional components. Supply chain analysts identify multiple single-point vulnerability questions. Venezuela represented certain supplier relationships. Iran another set. Questions emerge about additional exposure points. Prudent manufacturers implement risk management according to best practices. Building inventory buffers. Establishing redundancy. Diversifying supplier bases. All sensible strategies. All carrying significant costs. Costs that economic analysis suggests eventually affect consumer prices. Price increases. Inflation considerations. Economic growth implications. The Canada-US-Mexico trade agreement depends on predictable North American supply chains, according to trade framework analysis. Venezuelan disruption affects certain southern linkages. Energy price movements hit transportation costs. Manufacturing competitiveness faces various pressures. Canadian exporters competing in American markets face certain disadvantages, according to comparative analysis. Higher input costs in some cases. Delivery timeline challenges. Reliability considerations. Market dynamics shift. Contract renewals face questions. Facility operations require evaluation, all stemming from developments in distant nations according to interconnectedness analysis. Energy market dynamics. Energy markets amplify various effects according to sector analysis. Venezuelan oil supply questions remove volumes from global availability, roughly 2 million barrels daily, according to industry estimates. Markets adjust. Prices respond. Canadian producers potentially benefit from certain price dynamics. Initial assessment appears positive. However, examining downstream effects reveals complexity. Higher oil prices translate to higher gasoline costs according to consumer price tracking. Higher diesel costs. Higher heating costs. Canadian consumers face direct impacts. Discretionary spending potentially decreases. Economic activity faces various pressures. Manufacturing sectors consuming energy heavily face particular challenges according to industry analysis. Aluminum smelters, steel production, chemical plants, refineries, all confronting